What is life insurance? We're going to dive in this topic in this video. We're going to explore the cons and then the pros. Instead of giving you exactly why you need life insurance, let's talk about first why you don't need life insurance. So, life insurance has three different categories: whole life, term life, and universal life. But for the sake of this video, we're only going to discuss whole life. Life insurance is basically just a promise that the insurance company gives your family that when you pass away, they're going to pay out a lump sum of money. So let's get that out of the way. Now, what are the cons about life insurance? So the biggest con of life insurance is the cost. The cost of life insurance can be pretty high depending on your health and also your age. So those are the factors that you need to consider. So second con is the opportunity cost. What that means is if you're in debt or if you're planning for retirement, maybe having a life insurance policy should not be your priority. There are other reasons why maybe life insurance should be a priority, but for the most part, if you're in debt and you're still planning for retirement or haven't even planned for retirement at all, maybe a life insurance policy is not the biggest thing that you should consider. There are other things that maybe you should consider, like investments into the stock market, whatever that may look like, pay off your debt. Those are two cons that life insurance agents most definitely never talk about. Con number 3 is limited flexibility. So the limited flexibility part of this is that the premium stays fixed. So if your financial situation changes in the future, you need to make sure that you can actually afford the life insurance policy for your whole life. That's why it's called whole life insurance. Because the only insurance that is going to pay your family in the inevitable event that you pass away is going to be the policy that is in force. So if you don't know, if you're not sure if you can actually afford this policy for the rest of your life, then maybe it's something that you shouldn't consider yet because of the fact that it is a financial stress, that you have to make the payments every month. You can also make them annually, semi-annually, stuff like that. But that's something that I really don't see agents talking about, which is, can you actually even afford it? Because if you can't afford a life insurance policy of $100,000, then there's no reason that you should even be getting a quote or even looking for a policy that's $100,000. So the last con, which is con number 4, is underwriting requirements. Life insurance policies, for the most part, require the individual to go through an underwriting process. So if you have any kind of risk, meaning you have diabetes, high blood pressure, or whatever the case may be, you may be denied for coverage or even face higher premiums. So those are the 4 cons that you should be aware of before purchasing a life insurance policy. Now let's get into the pros of why you should have a life insurance policy. So I know I'm talking a lot of smack about why you shouldn't have a life insurance policy, but let's dive in on why maybe you should have a life insurance policy. So the reason number 1 is the death benefit. If you and your family are making $75,000 a year and you're able to pay a $250 a month premium for the next 30 years and you pass away at 67 or 75, well, your family could potentially get up to $400,000, $500,000 of death benefit. Now, if you think about it, that can be life-changing money for your family and the people that you leave behind. Let's put this into some kind of math so that way you can understand how it works out. Let's say you make $75,000 a year and you're able to put 10% away into investments for the next 30 years. So you put that 10%, which is $7,500 a year, away into, let's say, the S&P 500, which historically has made gains anywhere from conservatively 6 to 9%. So let's say that 7,500 times 10 is 75,000. I have a compound calculator, which brings your total investment for your family to $765,547. And that's if you get a 7% return annually. Now, this is just a conservative view. You can get more, you can get less, but just for the sake of the video, 7% annually for 30 years at 10% income if you're making $75,000. So let's say you have a $500,000 death benefit. You pass away. Now your family can receive that $500,000 death benefit. Your family can take that money, invest it into the market, or pay for your mortgage, pay for any debts that you had, and your family would be left with $1.2 million left. Now, they can use that money to survive for the rest of their life, meaning they can leave it in a investment account and just withdraw 3% annually, whatever the case may be. But as you can see, the benefit in this is you invested 10% of your income. Now that death benefit allows your family to have an extra cushion now that you're gone to replace your income, to replace your investments, and now your family can comfortably survive for the rest of the time that they're going to be alive. So another pro, which is funny because this is also a con, is the cost. So if you were putting $250 a month in your premium and you had a death benefit of $500,000, you would be putting in the next 30 years $90,000 for a death benefit of $500,000. So you can see that what you're putting in, you're obviously going to be able to get the return for your family. Now, that's the death benefit component. And because of the cost being so low versus the return that you won't see, but your family will see, is pretty good. $90,000 to receive $500,000 when you pass away for your loved ones. It's kind of a trade-off. Obviously, this is going to not be for everyone. It's going to be for very specific people. But if you fit in that bucket, now you know what it can look like for you. So there are definitely more pros that I can go over, but just to keep this video short and simple, the last pro I'm going to talk about is tax-free. The money that your family would receive is going to be tax-free. So that $500,000 lump sum, or whatever the case is going to be tax-free. And that's going to be a huge component, as obviously inflation and taxes look like they're going to keep going up. When you pass away in the next 30 to 40 to 50 to 60 years, knowing that your family is going to be able to receive that money and either invest or pay off your debt, pay off your mortgage, whatever the case may be, it's going to be tax-free. And just as the last little nugget of pros is income replacement. $500,000 can most definitely replace a $75,000 a year income for your family. So I hope you guys found this video informative. If you like this video, drop a like, drop a comment, and you can subscribe to Pirelli Advisory. I'm going to be bringing videos like this with kind of just different kinds of information, pros and cons. I am a life insurance agent, so if you are looking for any kind of policy, you can contact me. There's going to be links down below. But until next time, guys, we'll talk later.